Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBP USD, British Pound US Dollar. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of GBP USD in front of us. And as you can see, that the last traded price of GBP USD is 1.2265. Overall, if you look at the chart of GBP/USD, then obviously there is no doubt that this market is in uptrend. Okay, but if we just observe the chart carefully, then we can see that somewhere GBP/USD is losing the steam. Previously, market was forming big swings and it was going up. But right now we can see that the swings are very small. Market is kind of flat. So overall, the buyers are losing their steam. Okay, slowly and slowly. So yes, there is a possibility that we may see some downside in the coming week as well. But before I proceed, I would love to show you something. In my video on Euro USD and gold, I showed the same stuff. Stocks fall, yields rise as inflation data sends mixed signals. Yes, we are talking about PPI that came out on Friday. US producer prices increase in November. So usually PPI increase in PPI signifies that inflation is coming up. Rate hike worries keep Wall Street under wrap. So Dow Jones Index fell by 0.90% and S&P 500 fell by 0.73%. Okay. And if you look at the chart of DXY, okay, then we can see that after the news there was some little bit of recovery. Okay, but the most important thing about the chart of DXY, okay, is though the market is in downtrend right now, but this time market did not break the previous low. Market formed a higher low here. Previously, market was constantly forming lower highs, lower lows, and it was in complete downtrend under the full dominance of sellers. Okay, but right now, somewhere down the line, market is showing that it still has the intention of going up. So on Monday, if DXY tries to recover again, 105.50 will stand as the resistance again. If market crosses this, then 107, 107.20 will be the next resistance. As we all know, CPI, next week CPI, and the Fed's meeting will be very important. So before CPI, I think DXY will try to hold the previous low as the new support, that is 104.15. Let's see how DXY reacts after the market opening. Market opening will be important, and keep your eyes on CPI. And there's a possibility that market may remain dull also, okay, before the CPI. Usually December is not the best month to trade. Okay, personally I do not like to trade on December at all. So because market most of the time remains flat, unpredictable, and after 20th, obviously, we'll see a sleeping market. Now, let's have a look at a chart of dollar, GBP, USD. As I was saying, that if you look at the chart, then yes, the market is an uptrend. But if we try to understand the emotion, the body language of the market here, then obviously this is not very positive. Okay. So if you have watched my previous videos, my dear friends, then the overall levels that we have talked in my previous videos also are still very much intact. We have a resistance around 1.2380, 1.2400. We are considering this level because of the presence of the dynamic resistance on the weekly time frame, because of the 50 moving average here. You can see 50 moving average is standing here, and market is struggling to cross this level. So yes, market will have to cross this level to resume the uptrend, and right now market is facing some trouble. Now if we move the 4 hours time frame again, then we can see that before this level, okay, previously we were thinking that as market is forming higher highs, this will be the next resistance. But I think the previous high of 1.2330 or 2330, 1.2330 will also act as a minor resistance for the market, because right now we can see the buyers does not have much strength. So good possibility that on Monday, if market goes up also, market may show some correction. Okay, so if market reverses, experienced traders with proper risk management, you can consider taking a sell position. But 1.2380, 1.42400 is still the big resistance on the chart of GBP USD. Beginners, I will not consider, okay, I will not recommend you to take a sell position around the previous high. But yes, beginners, if you see market reversing from 1.2380, 1.2400 level, you can consider taking a sell position. But keep in mind, overall, the trend of the market is towards the upside. So usually, whenever you stand against the trend of the market, there should not be any compromise with the risk management. So do not gamble with your hard-earned money. Take proper precaution, risk management, and then only place the trade. Otherwise, you can see that the 50 moving average or the trend line is also acting as a dynamic support for the market here. But the problem is that market has already tested the trend line too many times here. You can see 5 to 6 times. Okay, usually market or any level loses its strength if we find it testing the level too many times. So market has already tested 5 to 6 times. So this level I think is not more trustworthy. Okay, this trend line has become very risky for us. Okay, so as a result, if possible, try to avoid taking any fresh buy position on the trend line. Okay, but if you're holding any buy position, you can be on the trade. So please be careful, okay, while taking a buy position. If market breaks the trend line and starts falling, your next support will be around 1.2060, 1.2030. This is the next logical or big support on the chart of GBPUSD right now. We are considering this support here because of Fibonacci as well as the previous price rejection around this level. Let me show you. This is the reason we're considering this 1.2060 to 1.2030 as the next support for the market. In my video on EURUSD also, I clearly mentioned one thing, that volatility will play a big role. Again, I'll say the same thing here. After the market opening, observe the volatility of the market, because usually the first half of Monday, we do not see much volatility. So if the volatility of the market remains low, then you can definitely expect the market to reverse from the resistance here, and you can take a sell position. And if the volatility of the market remains low, if you see that there's not much volume, then also you may see market taking support again on the trend line. So volatility will decide, because see, try to understand, if market wants to break the trend line, or if market has to break the trend line, it requires volume. If there is not much volume in the market, market will not be able to break the trend line, isn't it? So what will happen? Market will bounce, market will go up again. If not a big bounce, at least you can expect 30-40 pips. Okay, so observe the volatility of the market. If you see the market is slow, market is forming small candles like this, then you can expect the market to bounce from the trend line again. But if you see that no, market is market is a volatile, or market is showing red candle, big red candle, then obviously sellers are trying to dominate the market, and in that case you should avoid taking a buy position at a trend line. So volatility, yes, volatility decide many things. So as a trader, you need to observe the market, then only take the decision. So my dear friends, this is it. Hopefully you understood. Thank you so much. Bye bye. Take care. And again, I'll say please follow proper risk management. No trader is 100% accurate, so I can be wrong as well. Bye bye. Take care.